Hello, people, and we have some weekend crypto news for you. First off the bat, BlackRock, yes, the cabal itself, expects a Bitcoin ETF approval by Wednesday. And this is not surprising, but it could be a big deal and maybe puts the final nails in the coffin for the SEC and Elizabeth Warren's crusade against crypto because this is the cabal speaking. And if the cabal speaks, people tend to listen. So BlackRock, the world's largest asset manager, expects the SEC to approve its application for a spot Bitcoin ETF on next Wednesday or possibly before next Wednesday. But next Wednesday is the last possible day they can actually approve. So BlackRock is expecting it. And otherwise, they're also expecting to cut about 3% of its staff for about 600 jobs. So BlackRock is basically telling Gensler, bitch, you better approve my Bitcoin ETF by then or else. So basically, this gives confidence to a lot of people because, a lot of people won't believe what the market signals are telling them or the fact that the SEC is asking everyone to file supplemental forms to actually get ready for the ETF, but they will believe BlackRock because BlackRock they believe is all powerful. I think that's a mistaken belief, but it's what they believe. So it's obviously just one of several firms that submitted the final 19B4. And it's not only the firms, the exchanges like NASDAQ also updated 19B4 filings. So everyone is getting their ducks in a row. So basically, along with BlackRock, they have Valkyrie, ARC21 shares in Invesco, CBOA BZX Exchange, and they also filed VanEck, WisdomTree, Pando Asset AG, and Franklin Templeton. Of course, we've been anticipating this crypto ETF for a while. Actually, we've been anticipating this ever since 2018. And I think the SEC itself, with commissioners like Hester Pierce and others, are getting more and more favorable towards the Bitcoin ETF. So the fact that BlackRock expects it, I think that tingles many investors' fancies. And obviously, as we've reported before, they do seem to have about $2 billion ready to go in the first week. We don't exactly know how much customer demand there is for this ETF, but we do know there is some demand, and that generally, yes, does bode well for Bitcoin price. So there you have it. The cabal itself is saying we expect a Bitcoin ETF to come Wednesday. And these people like when they make announcements like this, because of their credibility, they generally don't like to get things wrong. So this is basically them telling the SEC that, hey, you better approve our ETF by next Wednesday or bad things will happen to you. Basically, they have a lot of power within Congress and they can shut that stuff down if you believe the people that really believe that BlackRock is all powerful. In other news, someone sent $1.2 million in Bitcoin to the Genesis wallet mined by Satoshi Nakamoto. This I don't think is a big deal because the Satoshi Nakamoto address is well known and anyone can actually send Bitcoin. Why someone would send 1.2 million Bitcoin there, I'm not really sure. Some people are speculating that it is Craig Wright because his case to prove that he's Satoshi Nakamoto starts next month. I think the judge is basically forcing him to because he would never actually do this himself. He's been trying to delay as much as he can, so he would never send in a final deadline date. I feel like he's going to rehash the same thing, and he's going to prove to the court once again that he's really not Satoshi Nakamoto. He did sue someone for saying he's not Satoshi last year, and I'm pretty yes, and he did actually lose because he couldn't produce evidence that he was indeed Satoshi Nakamoto. Whenever he sued people and people have actually had money to defend themselves about Satoshi Nakamoto, he hasn't actually done too well in those lawsuits because he has no actual evidence of him actually being Satoshi. And remember, it doesn't matter if someone sends money to Satoshi's wallet. It only matters if Satoshi sends money out of his wallet because that means someone would actually have access to the Satoshi wallet, and the person that has access to the Satoshi wallet would actually logically be Satoshi Nakamoto. My guess, as always, is that Satoshi is a combination of Hal Finney, Adam Back, and Nick Szabo. One of them's dead. He was a cryptographer that got the first Bitcoin transaction. Another one owns Blockstream. I don't really know what the heck Nick's doing right now, but he was always in the early rumors as well. I believe that Craig Wright was back in Australia when Bitcoin was actually invented, and we know that Bitcoin did originate in San Francisco around that time. So most likely, almost like 99.9%, it's not Craig Wright, and he's just really trying to delay the inevitable when he doesn't really have any proof that he is Satoshi Nakamoto. There is an interesting XRP lawsuit coming up, and it's actually really important. It's not against the SEC, however. That lawsuit is pretty much over. At least the most important part of it is this is a class action lawsuit against Ripple XRP led by Vladi Zakhanov. Maybe this is just another SEC lackey trying to get them. And basically, guess what? They're suing Ripple for selling unregistered securities. So this might actually be the SEC's stealth last-ditch effort to pin XRP as a security. I wonder why this is still going on, because Torres already ruled that XRP is not a security. The SEC has basically failed in its attempt to get a special appeal, and the SEC has not filed an appeal yet, so it is basically like the law of the land that programmatic sales are not securities. And pretty much all these sales purchased by the class action lawsuit people are programmatic sales, so they would actually not be securities. Furthermore, there's been a lot of amicus briefs submitted to the court, and there's actually more people, more investors on Ripple's side than on the people that are actually suing Ripple's side. So I feel like this is just it's almost like a hired thug for the SEC to try to have one last shot at Ripple. So the hearing will be January 11th, and it'll focus on the motion to approve the form and manner of class notice. The judge has already allowed the lawsuit, but that does not mean they're actually going to win. So Ripple could be forced to part with a significant amount as compensation. So this is more of a monetary damages thing, not a criminal damages thing. So they're mentioning that there's actually zero reason why this case should actually go on, because everyone purchased these XRP tokens programmatically. And Ripple is going to Ripple is going to rely on Judge Torres' ruling in their arguments. And I think the ruling is pretty cut and dry. Programmatic sales are not securities. So I don't think they have much of a chance of winning this case at all. But I do think the SEC is somewhat secretly backing this case, hoping to get some reprieve. Because remember, the SEC eventually probably wants to appeal the Ripple ruling. And if they lose this, I guess it's just more black mark on their face. And they also want to use rulings such as these against other crypto companies that they might be suing right now. And of course, they want to use it against crypto companies in the Coinbase and Binance lawsuit. So there's a lot at stake for the SEC, but I think every one of these lawsuits is going to make their position look worse and worse, and they really don't want that. Of course, we're going to have to discuss the Celestia situation. It's gone down a little bit today, but it's pumped a lot in the recent days, and I think I've found part of the reason. It has to do with their staking. So staking on TIA, which is Celestia, on native platforms is yielding between 15 and 17%. And of course, that's why it gained 22%, because it's become one of the best staking platforms. That is a big staking reward. It is actually more than, I think it is more than Polkadot and Cosmos offer right now. Cosmos did offer more in the past, but because of inflation problems, it had to tone down its staking rewards, and Celestia might have taken the cake. Obviously, high staking attracts a lot of people because they want to make a passive income. But however, high staking is hard to go for a long time because it does result in significant inflation. That's not something that TIA has to worry about right now, but it might be something they have to worry about in the future. So they've gone down a little bit today like everyone else, but with the 15 to 17% staking, I think more people will be interested in the short run. Not really sure if I'd be interested in the long run because of the inflation problem I just mentioned. But in the short run, they can get people to lock in some coins for staking, and there'll be a lot of buy pressure without a lot of sell pressure. So staking involves locking coins in a cryptocurrency network in return for rewards. Doing so with TIA on native platforms yields between 15 and 17%. Minus fees to use. The fees are pretty inconsequential most of the time. The unusually high yield seems to be drawing demand for the cryptocurrency. As of Friday, the market capitalization of TIA is just under $2 billion, and they've received a lot of attention. Of course, TIA is trying to introduce the modular era, and it rolled out its mainnet beta in October. And of course, initial trading started around 230, so it's now over $10. So it has actually been going up a lot. There's FOMO and there's really good staking, and that's probably why TIA has gone up so much. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.